Welcome to Early Edge Club. We are a small cohort of serious microcap investors. Every month, we deep dive into two microcap stock chosen by the community. We are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. Today's section is divided into understanding first the business model, the industry, and then we use our 20-factor scoring, and finally our take on valuations and risk. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
So TPL is a part of Time Technoplast Ltd, which holds 75% stake in the company. It manufactures HDPE drum containers, which contain capacity of 20 to 250 liters, primarily used in bulk packaging of specialty chemicals, paints, inks, and pharmaceutical products and FMCG goods. Also, the company manufactures small packaging products with container capacity of around 30 ml to 10 liters. Now, the product verticals include plastic drums, jerry cans, and immediate bulk containers, IBCs, which we'll see now. So, these are their products. They have narrow mouth drums, narrow mouth and wide mouth carboys, and open top bulk and medium drums, QUBCs and Kobo IBCs, and small packs. Now, coming to the industry analysis, the global plastic market was valued at 624 billion USD in 2023 and is expected to grow at a CAGR of 4.2% till 2030. The government aims to triple the sector's economic contribution to USD 126 billion in the next 4 to 5 years. Moreover, FDI-led growth in construction along with rising exports is bolstering the domestic demand. Also, the global packaging industry is also estimated at around USD 1.14 trillion in 2024, growing at a CAGR of 3.89%. Also, the Indian packaging market was also estimated a size of $84 billion in 2024 and is expected to reach around 142 billion USD by 2029, growing at a CAGR of 11%. Some other insights are that the plastic packaging, especially the PET and high density plastic equipment based, holds a dominant share here, and growth is driven by expanding FMCG, pharma, food processing, and e-commerce sectors. Government regulation is pushing the industry towards sustainable alternatives like recycled PET, and India's chemical industry is also growing very well and is expected to cross 300 billion USD by 2025. And India ranks sixth globally and third in Asia in overall chemical production. So this sector contributes 7% to India's GDP and remains largely delicensed. So industrial packaging demand for chemicals is a major driver for rigid plastic containers manufacturers like TPL. Coming to peer analysis, these are all the companies which are manufacturing similar plastic equipments, not of same size and density maybe, but yeah, we can get some idea about it. So TPL Plastics PE is quite good as compared to most of its competitors. However, Odeon Enterprises has given a much better year-on-year quarterly sales growth. And compared to the top 3-4 names, TPL Plastics year-on-year sales growth has been very modest. They also E is quite good. Only Moltex ROC and ROE is better than them. So that way they're also positioned decently in the market. Coming to future outlook and insights. So TPL Plastic is poised for strong growth driven by industrial demand in chemical, pharma and specialty sectors. Volume growth of 16% in fiscal year 2025 validates robust demand and was followed by successful commissioning of the Dahej facility. The company is also planning a new greenfield project at Lote Pashuram, which will expand their intermediate bulk containers and drum capacity to cater to high growth sectors. And the management targets a medium term ROC of 25% through automation, energy savings initiatives, and brownfield expansion. Management anticipates that further volume-led growth will sustain EBITDA margins of around 12%, and they've also recognized 7.1 crores of non-core assets which they will liquidate to support expansion without stressing their balance sheet. Now, their bull case scenario is as follows. Margin expansion through automation and higher mix of value-added products like IBC is likely to happen. Also, they would be the beneficiary of China plus one strategy with India's chemical and specialty chemicals export booming. Strategic re-engineering, cost cutting, and asset-light brownfield expansion can lead to efficient growth and a sustainable rise in ROC, which the company is currently involved in. Also, the volume is expected to grow at a CAGR of 16%, supported by scaling up of the Dahej facility and timely commissioning of the Lote Pashura greenfield plant. Demand for regulatory compliant packaging from pharma and chemical sector solidifies the company's position as a preferred supplier because they are licensed, whereas the rest of the industry is mostly delicensed. Also, bear case scenarios are as follows. Environmental regulations on single-use plastics pose risk to the long-term growth of the company, and any delay in the new plant's commissioning or slower than expected scale-up limits the revenue growth, and slowdown in key customer sectors like chemicals, pharma, or agri exports due to global recession or regulatory shifts might reduce the volume growth, and pricing pressure from unorganized and local players or new entrants in the rigid packaging space could erode the company's market share and margins. Also, the raw material availability risk remains with commodity price risk due to fluctuation in polymer prices. So, this is something to note. Coming to the 20 factor scorecard, they had a 1 is to 1 bonus issue in 2021 and no other furnace history, so I gave them 5 here. Director and promoter track record is good. They're all experienced personnel. There has been an error here. I think I marked it A instead of 5. We'll add that up. These are as follows. So they have purchase of finished and unfinished goods from related parties worth 28 crores, sale of finished and unfinished goods of 46 crores, and purchase and sale of fixed asset of 5 crore each. So it hasn't been disclosed properly in their annual report. So that's something very concerning that the company does not disclose the information very well. So I give them a 3 here. Coming to board independence and compositions, number of directors 6, independent directors 4, so 67% independent director representation with zero family on board. So I give them a 5 here. CEO KMP salary is also not disclosed properly. We don't know who receives how much salary. Only a section was mentioned called managerial salary with 75 lakhs in 2024 and 73 in 2023. So I gave them a 5 here. Key person resignations as follows. CEO resigned in 2025 due to retirement and independent director resigned in 2014. So negligible resignations. I gave them a 5 here. Auditor have their tenure till 2027 and they have an unmodified opinion for the past 3 years. And short term, they're good. And long term and short term credit opinion is quite good. They've got a CRISIL A plus rating and CRISIL A1 rating. So they're highly rated. And regulatory and legal issues are none. So I give them a 5 here. Investor communications are available, but presentation and con call is not there. So I give them a 3 here. Coming to financial health, so they have customers from various industries, including chemicals, specialty chemicals, pharma, FMCG, and food products. We don't know much details about what's their concentration or what are the nature of their orders. So that's why I gave them a 3 here. Also, revenue growth versus receivables has been good, and receivables have been growing slower than the revenue. So I gave them a 5 here. However, receivables is just 17.1% of revenue. Also, operating cash flows and by EBITDA use is was good last year, but it declined. This happened due to slightly increase in receivables and high decrease in payables. So that payables have been constantly decreasing over the years. So this is a bit concerning. So I gave them a 3 here. Now coming to the inventory trends, inventory days is around 86. It's improving constantly. Also, DUC is also improving constantly. Still, I gave them a 3 here pessimistically since it's on the higher side. Also, cash conversion cycle is also quite decent, around 85. But the payable days are constantly reducing, which is putting pressure on the working capital. So I give them a 3 here. And capex versus revenue is around 7%. Also, fixed asset turnover is good. Asset turnover is also good, and return on invested capital is around 17%, which is also quite good. Now they're going to liquidate the 7.1 crore of non-core assets to further expansion. Also, the greenfield project at Lote Pashuram is going to complete in this year itself, and they're planning on expanding their capacity by brownfield development. So I gave them a 5 here. Debt and interest coverage is good, so I give them a 5 year. And interest coverage is 7. Debt to equity is 0.3. The liquidity position is also good, so I give them a 5 year. It has improved significantly over the years. ROC and ROE metrics are quite good and they have been improving, so I give them a 5 year. And growth consistency is decent. Bottom line growth is much better than the top line growth, so I give them a 5 year. This makes the total score in governance and promoter behavior 41 out of 50, and in financial health 42 out of 50, summing up the score to 83 out of 100.
Okay. Overall, looks like a decent company,
Yeah,
but the sector as such would grow in tandem of the sectors they are catering to, which is basically the
the plastic
chemical
manufacturing.
yeah, chemical specialty, chemical and pharma, FMCG. It is going to grow in tandem. Time Techno has the majority stake. One thing I need to dig deeper with this company is within Time Techno, they are also doing industrial packaging, similar products, and they've given a link to a website which doesn't take to TPL Plastech. I would have actually liked if it had taken to TPL Plastech and not some tech pack containers. And here, if you see, they are doing the same products that TPL is doing. Even this QBC, this one Time Techno, is also doing similar products. If I'm not,
Yeah. Also,
yeah,
Timetech sells a lot and buys from TPL.
yeah.
It's important to understand whether they are not milking out the company.
Yes, so that is a major thing that has to be looked into because looks like there is a lot of inter-company related party transactions happening. And also, why would TPL do it in a separate company and not from, sorry, Time Techno do it in a separate company and not from TPL directly? One possible reason can be TPL is just a manufacturing. Time Techno, it's more like into the front end sales. That could be, but that is something we need to dig a bit deeper into. However, coming to the valuations part of it, they have been growing since 2022, almost consistent in the first 5 years. Now there has been some growth happening. So extrapolating that growth and being conservative because there's no con call, we don't have any management guidance. Let's say they do 372 crores of revenue on a conservative basis. And yeah, for an industrial packaging company, I would be more comfortable paying anywhere between 15 to 20 as
Yeah, there
my,
are many options available in this segment.
yeah, this. So it the current price is around 80. It is beyond my comfort zone, but if you have a view as to what the growth rates are, which I could not find out, and if you are willing to pay, then it's coming to 92 rupees. So there is cash conversion happening and there is some expansion happening. They've done fixed asset. Can you throw some light on where the expansion is going into?
They are developing a greenfield in Lote Bashuram. So it is
Mhm.
going to be specializing in the IBC containers, which is the intermediate bulk containers. So that would
Okay.
go majorly, I think, to the chemical sector. Also, they're planning on brownfield expansion, but they haven't done any capex in that regard. So further
Okay.
capex is likely to happen.
Okay. Since they're doing huge capex, free cash flow is negative. So I've taken the net profit of 24 crores, which they done in 2025. And if your return expectations are, I would want a higher return, but I'm just taking 20 now as my return expectation and terminal growth rate of 3. And if our time frame is 5 and 5 years terminal multiple is 15, the implied or the company has to basically grow at 27% CAGR from this price. I'm not able to take a view if they will be able to grow at 27%. And if that is the case, it looks a bit of a correction would be a better entry point rather entering now. People or someone who has held the stocks for from a lower level of around 11, 12 and have a much longer time frame, then they can continue holding it. Basically, we didn't find red flag apart from the one that we highlighted earlier regarding how Time Technoplast and TPL are leveraging their association. Any final comments?
We already have two companies in this similar segment. Right now, I don't think it's in a right position to invest, but yeah, in future maybe it will come down to
Yeah.
decent
Yeah.
levels, or the company will grow extraordinarily.
Yeah.
I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20-factor scorecard, feel free to share your score and how it compares with us. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching and we will see you in the next one. Bye bye.